Hello and welcome back to Simple Money, the show where we explore important personal finance topics in short and informative episodes. I'm your host, Matthew Seawick, also known as the Friendly Financial Coach. Today is a big episode. We explore one of the most frustrating and intimidating topics in personal finance, the dreaded income taxes. So filing your income taxes is like being in a suspenseful film. You're holding your breath during the whole process in hopes of a happy ending because having to send additional money to the CRA is the worst. I'm hoping that by the end of this podcast series that you'll be more likely to get than give. At the highest level, your income taxes are paid between the Canadian and provincial governments. The amount that you're charged is based on a progressive tax system, which means that as you earn more money, you're taxed at a higher rate. This is done through a marginal system where portions of your income are taxed at different rates. The rate that is charged increases as you move to higher income tax tiers or brackets. So for example, if you lived in Ontario and earned under $42,201, you'd be taxed at a rate of 20.05%. Now that rate is composed of a federal and provincial portion. On a federal level, there are 5 different tax brackets, and there are more depending on which province you're in. So for example, if you're still living in Ontario, there's 11 tax brackets, with the highest having a rate of 53.53%. The amount that you pay on income taxes a year is actually quite higher than you may think, as your employer is likely withholding taxes from each one of your paychecks. The amount due or payable at tax deadline is really just to make up for any differences. To put the amount that we pay in taxes into perspective, Statistics Canada reports that the average 2-adult household spends about $5,300 a month on their expenses. Shelter is the number one expense at $1,600. In second place is income taxes. They found that the average household spent just under $1,300 a month on income taxes, or just under 25% of a household's monthly expenses. This is obviously a lot of money, so learning the income tax system can help you reduce your overall tax costs and navigate the system. So moving forward, this is how your income taxes are actually determined. The CRA likes to complicate things, so they may tell you something like this. Like, to figure out your taxable income, you start with line 150, subtract line 206 to 235, which gives you your line 236, and then you subtract lines 244 to 257, which gives you line 260, also known as your taxable income. So translating from accountant to human, it means this. You begin with your income from employment, taxable pensions, disability payments, EI, investments, business income, tips, and more. Basically any kind of money that's coming towards you. All of this revenue is known as total income. The total income is then reduced by tax deductions like RSPs, union dues, moving expenses, child expenses, and more. We'll be discussing this more in next week's episode as we dedicate it all to tax deductions and tax credits. After certain deductions are taken off, you are left with what's called net income. This is actually the amount that is used to determine which governmental tax credits and benefits you'll receive. In married and common law households, many benefits and tax credits are based on the combined net income of spouses. Other income tax deductions are then applied to your net income, like capital gains taxes and certain business losses. After all deductions are taken off, you're left with what's called taxable income. Your taxable income is then applied to the many tax rates. And at the end, the amount of federal and provincial taxes that you technically owe are calculated. However, this is when we use the magic of tax credits. Tax credits are directly subtracted from the amount of taxes that you are supposed to pay. Some of the big tax credits here are the basic personal amount, medical expenses, charitable donations, and much more. Maximizing your tax credits and tax deductions are one of the best ways that households can save on their income taxes. As mentioned earlier, This month we'll be putting a lot of focus on tax credits and deductions. So after we subtract the tax credits from the total amount of taxes that at first you are owing, you're left with the amount that you have to pay throughout the year. So this is the total amount that you owe to your taxes and is typically paid on a regular basis from your paychecks. Any difference at the end of the year is then returned or owed when your taxes are filed. So to summarize, we start with your total income and apply all income tax deductions. This yields our net income and then taxable income. Taxes are calculated on this taxable income. Your income tax credits then reduce the amount of taxes that you need to owe, and any remaining amount is paid throughout the year and then settled at tax time. That's it for today. I hope that you enjoyed the episode. As always, you can reach me on Twitter at ffcoach or email me directly at info@ffcoach.ca. Thanks again for listening and talk to you soon.